Where do you think cap rates are today in for investors?
Well,
I know it's a hard question.
Yeah, I think that it really is dependent upon what segment you're talking about in terms of product type, because we've seen different property types react very differently in this downturn. If you look at the market in total, prices have fallen 32% from the peak of the market in 2007. But if you disaggregate the marketplace and look at different segments, you see that the multifamily segment has performed the best, where walk-up buildings have only lost 16% of value. Elevator buildings have dropped 20%. Once you start to add a retail component to the mix, and this is mainly because we've seen consumer confidence fall significantly, consumer spending fall. When you add a retail component to the property, whether it's a mixed-use property where the retail store makes up at least 20% of the square footage, or the building's 100% retail, values have fallen 46% and 49% respectively.
Wow.
And then office, which has been most adversely affected, we've seen a 55% reduction in value in the office sector. And again, to drill down and really understand that number, you look at buildings that have exposure to the marketplace, which are those that have either very high vacancy or a lot of leases rolling in the short term. Value there has fallen 70%, whereas office buildings that are well leased, that have low vacancy, low turnover in the short term, they've only lost 25% of value. So getting back to your question about cap rates, we've seen cap rates move in the multifamily area. They were down in the 3 and 4% range. They're up to still a very low 5% for walk-up buildings, 4.5% for elevator buildings on average.
That's still historically pretty low.
Very low. But again, it's a function. Cap rates, don't forget, are a function of what interest rates are in general.
Sure.
If you look historically at how cap rates have fluctuated relative to lending rates, let's say, and it's interesting because most of the brokers in my office who have been in the business for 5 years or less believe that the world operates in a 5% cap rate environment, and that's the world. And I tell them, well, in the mid-'80s when I was selling buildings at 11, 12, and 13 caps. And they say, how could that possibly occur? And I say, well, what do you think people were borrowing money at in those years? And they don't know. And I say, well, interest rates were 11 and 12%.
Even 10, 11 years ago, cap rates were around 10%.
Right, that's right. So we're still at a relatively low point in terms of cap rates. On retail properties, we've seen caps go from around 5 to 5.5% up into the 7s. They've since retreated, and we've had cap rate compression, bringing them back down into the 6 minus, 6 plus range. And in office buildings, it varies widely depending on what that market exposure is that we talked about.